welcome to the Techno Fundamental Report for December the 28th. You know, for the last 2 years, 10 months, we have been weathering a very difficult bear market. This has not been easy. So the whole purpose of this video is to hopefully been to help you through that period, because I'm definitely starting to see a turn from a bear to a bull. Now let's look at this concept here, the fear of missing out. This is going to be an important concept, because if this becomes a dominant theme, we could see a lot of cash come into this market. Now, I wanted to point out here that for the last 58 days, the small cap stocks have gone up 19.67%. The IPO fund, which is IPO stocks, initial public offerings, has gone up 23% in the last 58 days. So when this thing has lifted off, it has been somewhat of a blast off. Now, the thing to realize here is there's a lot of cash on the sidelines. This is the amount of cash sitting in money market funds, which has now exceeded $6 trillion. So there's a lot of fuel, a lot of tailwind. Now, you know, when you're going through a bear market, you want to give up. It's just so difficult. I know I do. I have that problem. Since most people give up when they're about to achieve success. They quit on the 1 yard line. They give up at the last minute of the game, 1 foot from a winning touchdown. Ross Perot. You know, I really hate to see that, because when someone fights a bear market like this has been 2 years, year after year, month after month, and they finally get to the 1 yard line and they quit. That's just no good. Many of life's failures are people who did not realize how close they were to success when they gave up. Thomas Edison, you know, he invented the light bulb. It was, you know, it was very difficult, and you know, he almost gave up many times, but he finally got it. They found the right filament. That was the whole key to it. Now let's talk about interest rates, because that has been the whole culprit with this thing. Now, I introduced this indicator during the year. I've known about it for years, and it really has worked quite well. This is the power index. Now, this is the yield on the 5-year Treasury note, and this is the power index, which measures the change of the yield, a rate of change over the last 125 trading days, roughly 6 months. Now, we are at a negative 8.4%. So basically what this indicator is saying is interest rates have peaked. They're now in a downtrend. We got to deal with that as of today, and it looks like the Fed is pretty much finished. Now, this is just a graph just to show the yield itself, the 5-year Treasury, and you can see quite a dramatic drop here. Interest rates are dropping. They're definitely in a downtrend. Small caps are important because it's a risk-on investment. You can see here that, you know, the advanced decline line for the small cap stocks is really kind of going up in parabolic fashion, very bullish. This has really strong implications for next year. So we think that next year could be a good year for the market. Now, here is the new lows on the NASDAQ minus the new highs minus the new lows. And you can see we're now getting to a point now where we're getting more new highs than we are getting new lows. So the sellers have somewhat dried up and the buyers are coming in. This is the 200-day moving average for the S&P and the NASDAQ, both in uptrends. Primary trend is up. This is a very strong indication of a bull market. Aggression index. You know, I looked back over my indicators over the last couple of years, and I would say the most important indicator was this one here, which was the aggression index, where we're comparing consumer staples to the NASDAQ. So kind of think about it for a second. When things are scary and people are negative on the economy, they're going to avoid growth stocks. And then they're going to start, and these big institutions, they have to go somewhere. So they're going to primarily go into things like ketchup and mustard and toilet paper and toothpaste. So when this indicator goes down, it's telling you that's exactly what's happening. Everybody's getting super defensive. I would say this was probably the most important indicator, because we started to get sell signals back here in 21, and, you know, basically that you can see what happened. But The other indication that I would say was the most important was the individual stocks themselves. You know, when you track a portfolio and you keep a watch list, you're going to see the activity, either positive or negative, in the individual stocks first. And the indexes are nothing more than just a confirmation. Now, here are our three economic indicators. Again, interest rates clearly in a downtrend, oil below the 200-day moving average, trying to stabilize, and the financial stocks are doing great, which is very good news. Now, on the new lows for the New York Stock Exchange, below 40, good shape, really looks promising here. So just to take a look at this Renaissance fund, now this is the IPO fund that I talked about. You can see it's in a very strong uptrend. In other words, this is telling you that risk is on. People are starting to take risks, and this is a very positive sign. A couple stocks just to look at here real quickly. This is Arista Networks. Now, we've talked in the past about the importance of a base. Now, you can see here we have a nice base that formed after a gap up buy signal. So you got this big volume coming in, stock gaps up out of another base, has formed another base. Now we're seeing another breakout here and a very nice uptrend. Now on this stock, I think the way I would look at it, now I own this stock and I'm not going to buy any more. I have enough. But you know, if you were looking to buy this stock, I would watch this base here. Now the problem we're getting, because we're in the holidays, we're just not getting the kind of volume signatures that I need to see. So this is definitely the way you keep a watch list. You look for bases and then you look for volume confirmation. Not here yet, but I think once the holidays are over, we may see some. Here's Nutanix. This is a software company. You can again see the same kind of pattern, the breakout, the base, a breakout, somewhat of a consolidation in here, nice uptrend. Now it's starting to form another base here. So I would be watching this one and I would look for volume confirmation, which we're just not seeing yet. So all in all, things are looking good. Have a happy new year. I think 24 could be a winner. Let's just see what happens. Thank you very much.